Hi everyone, good afternoon. Welcome back to FOW Asia. I'm Joy Teo of Global Investor Group. Thank you, Tony and Sharon, for sharing your view on globalization of risk management in the fireside chat earlier. Our next panel will discuss equity and equity derivatives for APAC investors. Moderating the panel, I'm delighted to welcome William Ma. William Ma is CAIC Global Board Member and SBAI Asia Pacific Committee Member. William has over 18 years of industry experience in overseeing investment management, asset allocation, and investment product due diligence, as well as actively managing discretionary mandates and China domestic public market funds. He has won numerous awards. To discuss this topic, William is joined by our experts from Eurex, Hong Kong Exchange, MSCI, and Société Générale. While hearing from the speakers, we also encourage you to ask questions throughout the session via the Q&A function on your screen. Every session is being recorded and will be available on demand. So now I'd like to hand over to William to get the panel started. William, over to you.
Thank you, Joy. Hi, everyone. And I'm trying to be a good moderator. So I bought a new mic, for this session. Hopefully everyone can hear me okay. And I'm very honored to have, four very distinguished, panelists for this panel, coming from the investment world as well as the exchanges, including, Chris from Hong Kong Stock Exchange, Mesh, from Eurex, George from MSCI, and Nicholas from Société. And later on, we will have, four main questions discussing, from top-down perspective, like the current trend, investment theme, down to the tools, level, how options and derivative will help, Asian, investor to invest, in this type of market environment. And without further ado, I'll start, with our first question. And the first question is about more on the, top-down, macro perspective, on the backdrop of potential rate hike and global economic recovery from COVID, I would like to, ask the panelists, from a top-down level, what kind of thematic trend or market opportunities are you seeing globally, in particular for APAC investor? The first one I would like to address to, Chris, and in particular, Chris, I'm interested in your title, head of velocity, and I can see it's kind of like head of victory, which I like it very much. So over to you, Chris.
Thank you, William. Velocity, victory, whatever. Yeah, I've had a lot of questions about what the new title, head of velocity, means. Put it very quickly. Velocity is obviously speed over time, or time over speed. And I'm looking after all the clients that basically create the ADT, so the average daily turnover and the average daily volume in the futures, options, derivatives, stocks, equities, ETFs. So I have under my remit the prop traders, the market makers, the international retail, the Hong Kong mainland Chinese retail, and I even have the market data piece under me now. So I'm in the business of creating volume into our marketplace, William, and that's where the word velocity comes from, which is opposite to the other team member who's got the asset accumulation side, so more of the hedge fund and long only kind of guys on the institutional side. So that's where velocity, and hopefully I don't get so many more WhatsApps asking me what that velocity title is now. Answering your question, I think we went into 2021 obviously battered from the COVID era. And it was all fairly quiet. And then Christmas hit, and a few activities that took place in the US, particularly for the Chinese, which affected the Chinese market directly, then played out its course over the next sort of 6-9 months. So we've seen a very volatile first start to the year in Hong Kong, in a good way for the market, maybe in a good way for some of the firms trading it. Across our options and our futures and across our indices, but also we've seen a flurry of IPOs coming into the market day in, day out. And I think we had 1 week where we did 13 IPOs, which is kind of not unheard of in Hong Kong, but staggering considering the environment we're living in. And that and the IPOs and the way that our market's been changing into more of a tech focused market. away from a sort of financial banking market has really been the driver for our market. And I'll touch on it later, but some of the new products we've launched and launching are in respect of that. But yeah, it's been a very good year for the exchange. There doesn't seem to be any let up in terms of those IPOs and then the options we list and the futures and the indices and so on. So yeah, it's been that's what I see in Hong Kong.
Thank you, Chris. Victory and volatility, victory for everyone. And
head of victory, George. Head of velocity, head of velocity and victory and volatility.
That's good. And George, can you, address this question and also maybe make a quick, self-intro, if you don't mind?
Sure. Thank you, William, and thanks to FOW for hosting the panel, inviting me on. So George Harrington, I look after the global derivative business for MSCI based out of New York. Also look after our fixed income, our new fixed income index business. I think we are in we're in a period in the markets where there's so much concern, of course, globally with COVID and now the variants that are sort of dragging this crisis on. But at the same point in time, I think the market is sort of stabilized. In fact, very much so. Where we're in a lower volatility environment, sort of across the board, as markets, sort of churn higher. Certainly in the developed markets, the emerging markets have a little bit more volatility, but across the board, people are looking for diversification and new product sets, new opportunity sets. We were very excited to announce with HKEX just a few weeks ago that we do have now, coming very soon, the launch of our China A50 Connect Index, and the future that will be launched in HKEX around that right around mid-October. And we feel that that product, there's incredible demand in the market for more access to China, directly onshore, with a sector balanced approach to it. So we're very excited to have that product coming, because again, while there's been multiple back and forth with regulations between the US and China, the demand for access to China remains very, very strong. The demand for, like I said, sector balanced approach, risk management in China is very strong. And for us, this is a major product development that we remain focused on. The other key trend I would focus on as well is on ESG, and also with a tilt inside of ESG on the E side towards climate, where we're beginning to see, at least in the derivatives world, just the very beginning of a shift towards market cap index towards ESG or climate index. And we very much expect that to be a growing trend through the rest of 21 into 22, in an area where MSCI continues to innovate and partner with folks on the exchange side, on the sell side, for new products.
Thank you, George. Very insightful. And Mesh, over to you. Maybe can you make a quick self-intro, and what kind of trend are you seeing globally for Asian, investors?
Sure, thank you. So yeah, I'm Mezhgan Qabool. I'm head of market development and sales for equity and index for Eurex. So William, you asked about the backdrop of rate hikes and global economic recovery, etc. So here, from my side, I'll highlight 3 points. We're also assuming that rates are going to go higher, right? Where most analysts actually do not believe that it will. And generally speaking, value stocks performs better than growth stocks in a rate hike scenario. And here you could look at benchmarks like Euro Stoxx 50 or DAX index, which both show promising growth in the past months and after years of underperformance actually, and have achieved consistent positive returns outstripping their losses. We actually increased our trading hours into the Asia time zone since December 2018 for these products to be traded by our Asia investors and clients, and also launched micro DAX and micro Euro Stoxx 50 recently to allow for other investors outside of the general institutional that we have to gain the exposure to the underlying indices. And then looking at it from a sector specific angle, you know, banks also usually perform a lot better in a rate hike situation against other sectors. So here, Euro Stoxx banks futures, for example, which is also now available in the trading hours in the Asia time zone. My second observation would be that if the current status with the rate hikes remain so at or near zero, and the abundance of quantitative easing that we are seeing and the fiscal stimulus as well, which we've seen over the past 18 months, I would expect that the growth in tech stocks to continue to perform well, given the increasing flow into technology sector, since the interest in disruptive tech, big data, and computing is actually blossoming. Here we have stocks Europe 600 technology index, for example, looking at 37 tech-related stocks. And then apart from that, as George also alluded to, China is very important and is somewhere that everyone is looking at. So we also launched the MSCI China Tech 100 futures. Finally, on the themes that you kind of looked at, a thematic trend, here we're looking at increasing trends in ESG, what George also mentioned. So, you know, since COVID-19, ESG and climate are now firmly established as high priority. Asia Pacific investors were a little bit behind, I would say, in this space, but now more and more asset managers are looking at it. So we have been the first exchange to launch ESG products, first on our stocks indices, and then in partnership with MSCI, we kind of increased that, where open interest is now over 4 billion euros. But I'll go into a bit more detail in that later on in the panel, William. Thank you.
Thank you, Mesh. You know, very insightful. And last but not least, Nicholas, over to you.
Sure. Thanks, William, and thank you to FOW and all the panelists today. Thank you very much. Look, so I'm Nicholas Lent. I take care of the equities business here in Singapore and Southeast Asia for SocGen, and basically looking after all of our structured product business, our flow derivatives, our prime brokerage business, equity cash, and also Delta One in financing. So, I mean, just to kind of look at what everyone said, I definitely agree with a lot of what everyone said. Chris mentioned market volatility. Obviously, that's been immense. If you look at cross-asset correlation, I mean, that's coming quite a bit. One big theme for us has been bond replacement strategies, obviously going into equity. So that's been an interesting theme. Obviously, you know, with a depressed rates environment, you know, I think that continues for a bit. Obviously, as you mentioned, you know, rates moving higher, you know, going forward and whatnot. Obviously, that was put on a bit of a pause with the dovish Fed coming through. But obviously, I think that will be a theme going forward. And, you know, banks and whatnot definitely do make sense from a value perspective. We saw, you know, Topics banks, for example, move up quite a bit earlier on in the year. And that was a big kind of play or theme in the market there for a lot of the institutional investors and whatnot. China, obviously very big focus, especially, you know, previously with the EO or the executive order rules coming through. There was a lot of liquidity that was kind of zapped out of Hong Kong in terms of option making or you know, market making on our side in general. So we're very much happy about the new listing of the options on futures for HSI and HSCEI. Obviously, the liquidity remains a bit sparse at the moment, but we're going into the first expiry coming up. So I think that will be quite interesting. And one area we didn't really touch on is Southeast Asia. Obviously, I think it's been an uneven recovery overall in terms of vaccination rates. Obviously, we're going through another wave right now. But places like Indonesia, Malaysia, and whatnot, we are seeing demand from kind of longer term investors and whatnot that are looking at going along some of these markets at these depressed levels. So I'll leave it there. Thank you, Juan.
Thank you, Nicholas. You did a great job in adding point and also summarize, you know, for the audience, you know, for the latest trend. And the second, you know, topic that we are going to talk about is to update the development and in particular, you know, accessibility of emerging markets, you know, in the region for all investors. So the second question is, you know, given the nature of emerging markets asset for global investor, you know, such as, you know, portfolio diversification and potentially less correlation, you know, with growth opportunity. What are you seeing in terms of latest development and accessibility of emerging markets, you know, for global investor? And then this one, I would like to address, you know, to George first, you know.
Great, thanks, William. No, for sure. I think the overall sort of market trends that we're seeing now, you know, are really driven by, you know, the increasing demand trends, you know, for product that basically, look at the volatility scenario that we're seeing in the market right now, which is, of course, is very, very low across the global markets, but allow for that sort of wider, broad-based exposure to the APAC region. So when we look at the partnerships that we have, especially with the with exchanges who are represented on the panel with Eurex, and HKEX. Broad-based exposures, are definitely growing, in overall popularity. So, products, that go across, the larger China exposure, like MSCI China, which obviously encompasses not just the mainland, but Hong Kong, and the Greater China region, but then also even further into EM Asia. And of course, rolling up into the larger emerging markets region. Those are the areas where we're seeing more and more demand. People are looking for those wider, broad-based exposures. And again, going into ESG as the wider group, but specifically focusing on climate and climate-related exposures. We're in the process of launching a number of climate change-related indices, Paris-aligned indices, climate transition benchmark indices. That trend, I think, is very, very important, and especially as folks look at the emerging market of Asia, sort of the Asia ex-Japan, we think that's going to be absolutely huge. And as Mezhgan said, we have a full sort of suite now available, with Eurex, that services that sector. We think we'll do more on that in the coming year, but we definitely, certainly if you look at what's going on around the globe, there's so many climate-related events going on, whether it's hurricanes in the northeast that we're seeing, or wildfires, where people are become very, very concerned at the overall climate change trends that we're seeing right now. We think that is one of the most important things that people are beginning to change in their investing focus, and those product offerings we think are critically important.
Perfect. Thank you, George. And Mesh, do you have any ideas or points, on the latest development and accessibility of emerging markets in the region?
Yeah, sure. I mean, look, emerging markets, it does kind of represent diversification opportunities, right? So if the global recovery looks like it's stalling or it's recovering, etc., it has a negative impact on EM, as it's dependent on, emerging market is dependent on strong global economy. So assuming that the recovery continues, what assets look favorable, right? So again, going back to China, given the current situation with US restricting Chinese companies listing on US exchanges, combined with presidencies purging essentially the domestic tech and housing market, investors are looking at EM ex-China. The crackdown, in China has resulted in a slowdown in the equity market there, and since March, I think it's kind of been on a downward trend, including CSI and also the Hang Seng Index and the HSCEI as well. But despite the, this recent development with US-China tensions and the growing crackdown, China big tech and equity market still is alluring to investors. So we kind of worked on some solutions to give the access to these markets on Eurex by listing MSCI large cap Hong Kong index on our platform, as well as MSCI China Hong Kong listed large cap. And then, tech still being at the forefront of everything else. MSCI China Tech 100, as I mentioned before, is also showing robust performance, and this has been listed on the exchange as well. Outside of China, Korea and Taiwan, right, has really good political stability, and they're heavyweights in tech and semiconductors as well, where a lot of interest comes, and there's a pickup in the KOSPI Composite Index and the KOSPI 200 Index as well. And here we have a 10-year-long link with the KRX as a partner, where we actually have the KOSPI futures, KOSPI options, KOSPI mini futures, and then recently listed the FX US dollar Korean won as part of this link. So it's just a fungible product where it trades on Eurex during the CET kind of US overlaps, and then the open positions gets transferred back to the KRX for the continuation of trading. And then exposure to Taiwan, of course, you've got the MSCI Taiwan Index that offers to access to the semiconductor industry. which takes up about 45% of the index weighting. And then finally, I would say outside of Asia as well, you have LATAM and EMEA, right? And here MSCI Brazil is a great addition to our portfolio, giving the opportunity to the LATAM market as well.
Thank you, Mesh. Love to hear the availability of, different tools for global and Asian investors to compose the portfolio. And I'm a big fan of, tech and growth. Nicholas, do you have any points to add to this, accessibility to EM?
Yeah, no, I mean, I think everyone summed it up very well. And obviously we rely in terms of, market product and whatnot on MSCI, on Eurex, on, Hong Kong Exchange and whatnot to market make on a lot of these, innovative products that they're putting forward right now. And, I think they continue to develop, especially in China. I mean, George mentioned the A50 futures and whatnot. I think, all of these things are definitely in high demand. We're seeing a lot of global investors, especially large asset managers, insurance funds, sovereign wealth funds that are, looking at linear and non-linear type products. Specifically on our side, in terms of structured products, this is definitely a big theme for us. ESG has been mentioned many times, and it's going to be mentioned many times over and over on this front. But I know MSCI has some great product in terms of ESG. We're obviously doing a lot of filtering and custom baskets and all of these types of things. It's very well developed market for us in Europe. I think people are asking and getting their feet, wet in a lot of the different type of ESG products here across Asia. And it's definitely a big demand that we're seeing and something that we want to continue to grow. Yeah, I'll leave it there. Thank you.
Thank you. Thank you, Nick. And Chris, what is your view on the latest development and accessibility of EM for global investors?
Yeah, thank you, William. So we made a big step into the emerging markets middle of last year when we launched the 30 plus MSCI contracts on the exchange, futures contracts, which is including things like access to Taiwan, Vietnam, and so on, which was a big step for us. And we're obviously, we're very excited about launching 18th of October, I think I'm right in saying, the MSCI A50 China Connect future, which has been long asked for and will complement our cash market, which Mez mentioned is slowing, like the China market's slowed down. I don't think it's so much slowed down. I think asset prices have gone down, but I mean, we've seen volumes increase dramatically this year. Give you some sort of idea, southbound flows coming in from mainland China into Hong Kong. So that's mainland China trading Hong Kong market has grown this year in terms of percentage of our marketplace from about 8% of our marketplace to about 12.5% of our marketplace. So that's about 39 billion Hong Kong dollars on a daily basis. So about $4.5 US, I guess. And northbound's terrific. The amount of flow going into Shanghai, Shenzhen through the Hong Kong Connect pipes, 100 billion a day, which represents about 6% of their market. So staggering amounts of volume. Yes, asset prices have gone down, and there's been some kind of rotations out of some of those affected tech stocks. But I think there's certainly no let up in terms of investors willing to invest and trade. So yeah, we've launched, I think, 11 stocks this year, biotech and tech, which we've put options on. And I think that's as a result of changing some of the listing rules for biotech. So we're trying to get more and more access to some of these emerging markets products as well in the emerging markets. And that's what we see in Hong Kong.
Good job, Chris, and you can be ahead of volume as well. We're talking about, huge volume. And the third topic, I would like to cover is to be more specific, because we talk about top-down, trend, accessibility. The next one would be very tool specific, in particular in current market environment. We are trying to explore, equity indices and option derivative available in Asia to brace for the market fluctuation. For example, I believe, equity indices and derivatives could be useful tools to embrace portfolio construction from a portfolio manager perspective and to improve the overall portfolio, risk reward. And given the current market volatility, I would like to ask, everyone, are you seeing, more equity indices and options and derivatives more available in Asia? And in particular, it would be nice if you can share a few, interesting examples that you think, investor can take a look or help them to kind of like embrace, the current market, fluctuation or volatility. And I'll start with Mesh this time. Thank you.
Sure. I mean, so let's just, we'll continue the theme with MSCI a little bit. So there's a lot of kind of promotion going on for George at the moment. We, MSCI, on Eurex, we've had it for over a decade now as well. And specifically for Asia, we have over 31 Asia-specific related futures on both single country and regional indices, trading 21 hours through our platform. I mean, obviously SGX delisted the Asia related or Asia underlying MSCI contracts from their platform as of last year. And here Eurex actually took close to 100% of the open interest and volume from SGX to our platform. Since we had the contracts already listed, the liquidity behind it, a global counterpart network that's trading around the clock with one another, and so on and so forth. So here we now have over 75% of the market share in Asia, in APAC net total return futures. And it's also the most liquid market for MSCI Emerging Markets Asia, where we actually have 80% of the market share now. And then we also had demand actually come through for X contracts. So here we launched two. One was MSCI Emerging Market Asia X China, and one was MSCI World X Australia, at the back of superannuations in Australia, kind of looking at exposure outside of the domestic market, and being able to have a more diversified portfolio. And then the second thing I would say is ESG as well. Being the first exchange to launch futures in 2019 already, we now have 21 products. We kind of started with a phased approach here, where you look at exclusions first, right? Which is a quite simple methodology, taking weapons, taking away tobacco, and so on and so forth. But then now we have more complex methodologies, such as positive screening and enhanced focus on specifics of the E, S, or G. Looking at carbon specifically also. So in Feb, we broadened the offering here by introducing Stocks USA 500 ESG futures, looking at MSCI World ESG screens, and then also our MSCI ESG Enhanced Focus, which is a lot more carbon driven given the demand that we have. And I would say, yes, and micro contracts as well, we'll touch on retail later, but micros are very much in demand by Asia investors, not just institutionals, but the retail client base as well. But I guess we'll talk about that in a moment.
Thank you, Mesh. Yes, be nice to the environment. I think it's one of the tools to kind of like weather the current market volatility. And Nicholas, do you have any, idea on points on how the tools would help Asian investor to brace the market fluctuation?
Sure. I mean the initial question was are there useful tools, right, to enhance portfolio construction? And I would say in Asia it's twofold. It's one, there's a lot more product coming online in Asia, across Asia, and a lot more tools that can be used to either for portfolio construction or hedging. And second, it's just the breadth of investors that are coming in now. The complex, portfolio construction development that they have is developed quite a bit now. So if you look at like a lot of the asset managers that traditionally were kind of long or long shorts and whatnot, a lot of them are using, hedging tools. A lot of them are trading in futures and options and Delta One products and swaps and different things like that. Long onlys are starting to do overwriting products, right? So all of this kind of, as they become more complex in terms of their strategy and whatnot, it just helps in terms of one, more product development and also liquidity overall. So yes, I mean, I think without a doubt in Asia, we're definitely seeing this being used more, and it's definitely a tool that can be useful across the board without a doubt.
Thank you, Nick. And Chris, over to you.
I think Nicholas makes a good point there. There's lots of product. I think this is me saying probably, I think we've probably launched the most successful new futures product in the region for a long time, which was the Hang Seng Tech Future. Blessed because we managed to turn the market into much more of a tech focused market than it was, as I said before, in the banking and the finance world. We launched that last November, and then we put options on that fairly soon afterwards, and that's been a terrific success. So much interest in terms of with all the executive order coming in, that's caused volatility in there. So that's been a terrific success. We have 4 ETFs listed on it. We have a whole ecosystem around it, and 2 leveraged inverse ETFs. And then a flurry of structured products, which are obviously, we've got a very heavy retail environment in Hong Kong, from mainland China and Chinese retail, Hong Kong retail. So there's a lot of structured products trading in Hong Kong with the local Hong Kong retail. And then obviously, if we're looking, we launched options on futures, which Nicholas quite kindly pointed out on our Hang Seng Index futures. And then as I said before, we're very excited about launching this A50 China Connect MSCI, which will take us to a place where many people have wanted us to be for many, many years, a much broader focused indice on China to complement our Stock Connect environment, which I think is very, very exciting. So yeah, we've seen a lot of product. There's a lot more product coming. Our stock option market has been going gangbusters. Again, tech focused, 11 listings this year just of tech options. We did 5 option listings last in July, I think, just alone. So it's a busy time with a lot more product, and our ecosystem just continues to grow, which is great. And I'll touch on the retail segment later, because I think that's intriguing when you listen to Nicholas say about the whole kind of the way the world trades, and I think that's exciting for everyone.
Exactly. Thanks, Chris. I think, as a portfolio manager, I do see, options and derivative very useful, because it creates a asymmetric, type of return profile. And also, for fund manager, they can also use some, ETF, to take long or short view, on certain countries and market. And George, last but not least, sorry, I understand you unmute yourself a few times, and I would like to hear, your feedback from Mesh, because Mesh mentioned about MSCI a few times in her, sharing.
I certainly appreciate Mezhgan's MSCI plug for sure, and obviously they're a great partner of ours. But what I actually want to talk about was, in the structured product market, where we're seeing thematics being a major driver of new product development, and for sure, I think everyone talked about some of the tech products that are out there. HSI Tech, China Tech 100, MSCI China Tech 100, and others. But it seems that especially in the APAC region, structured products are becoming a much bigger focus. And I know we're about to go into retail, and we'll talk about a little bit more in that next section on the retail side. But without question, from a client access standpoint, the diversity of structured products that we've seen really heavily driven by EMEA, and that goes into everything from internet to robotics to aging society. Thematic trends are very, very important. Obviously, MSCI is a big driver of those. They don't necessarily lend themselves to the large, listed futures or options products that are out there. Certainly, there's much more synthetic product development around that. But in the tech areas, we are all seeing innovation that's going in that direction. So it could come to a point where those major thematic buckets do lend themselves towards futures or options product development. But I think it's a key trend. I think it will continue, and that's an area where we will continue to innovate based on the larger demand. But for the structured product market in APAC is massively important, and it's an area where I think all of us will be collaborating on for new product development into the future.
Thank you so much, George. And we have about 15 minutes left before I go to the last session and questions. If any audience have any question, please feel free to type or raise your hand if you like, and then I'll try to address that to the panelists. And as George mentioned, the last session and question is about retail investor, which is a growing importance for the overall global market space. And I've seen an increasing trend of retail participation in the stock and options, globally. And the question is, what is the impact to overall market? For example, in terms of volatility, liquidity, and all market participants that we should be aware of, in particular, from an equity and derivative, and also from an exchange, perspective. And this time I will start the question with Nicholas.
Excellent. No, I mean, I guess, for SocGen, I mean, structured products and options and volatility in general, I mean, this is what we live and breathe. I mean, this is definitely kind of our wheelhouse and a pillar within the firm overall. I mean, I think there was a lot of things that were touched on here. I mean, George obviously touched on the thematics in terms of structured products. I think that's obviously very important, especially as you get, you know, uneven kind of recoveries and correlations dropping, and a lot of just kind of sectoral kind of gyrations that we're seeing, whether it's between tech or value stocks in banks or whatever it may be. But apart from that, you know, Chris obviously, you know, he made a very good point on the retail side as well. I mean, CVCs, you know, the callable bull bear contracts and whatnot. I mean, these are very highly invested by retail investors, and they do cause a lot of kind of short-term volatility with knockouts and stuff like that. And this is something that we're obviously quite involved in and whatnot. But apart from that, it's also the structured products that are issued out of Japan and Korea. I mean, these are massive, you know, and they, you know, especially in Japan right now, we're above what 30,000 in terms of spots. So we're about to go through a very large knockout in terms of Vega notional. You know, we currently see about 40 million Vega outstanding on Nikkei in terms of auto callable issuance right now. We see about, at current spot, we see about 20 million Vega coming out at the moment. I mean, you have a squeeze up in longer term, you know, volatility and whatnot. You know, the exo books are hurting, right? I mean, it's very difficult to cover on these levels. But, you know, I think these thematics in terms of structured products, I mean, they drive markets, they drive volatility, and they definitely drive, you know, options, you know, flow and liquidity. So, yeah, I mean, I would love to hear some questions as well from the audience. If you guys have any questions, especially in terms of structured products, more than happy to delve deeper into that.
Sounds good. Thanks, Nicholas. Chris, over to you.
So a little plug for Nicholas and SocGen. They're obviously large structured product issuers on our market, and structured products is about 12% of our cash market turnover. But I think the interesting thing for retail and about retail is, we've been talking for years about how we see these social media search engine firms, you know, going into finance and going into trading and banking and broking, etc. Certainly in the Western world. But I think what's actually happened is in China, it's real. It's happened. It's happening, and we've seen terrific amount of growth from these brokers coming into Hong Kong. Setting these businesses up where they've already got a reach of millions and millions of users by the nature of the products that they're actually, the services that they're actually offering on their platforms, whether it's search, whether it's video streaming or whatever. And we're seeing a huge amount of this activity take place in Hong Kong, which I think is very healthy for all segments of the market. Our retail market in cash is probably about 17% of our retail market, and our derivatives is probably 11 to 12% so far. And that's considering the growth that we've seen in both those markets from institutional. So it's very easy for that retail segment to get left behind as the institutions pile in, but it just hasn't happened. If anything, the retail has grown. And I've got a team looking after mainland Hong Kong retail brokers, and then scouring the world for international retail brokers. We probably signed up about 40 new exchange members last year in the retail segment. So it's a staggering growth. And some of these retail guys have 10 million accounts that they claim. Even if we haircutted that by 10%, there's still a million. That's still a million active users that these guys bring to the market. And I think for SocGen, for MSCI, for the institutional business that sits around that, the prop business, the hedge funds, that's just intriguing for Hong Kong. And this is across every asset class, from structured products, cash, derivatives, and then obviously our equity options. And our equity options is a huge part of our market. We can trade 1 million equity options a day sometimes. So yeah, the retail segment in Asia, I think it's like a little bit of the big bang you're seeing from the 80s that you used to see, that you saw in London when the banks started to come in and buy these retail brokers. You're seeing huge retail inflow into Hong Kong.
Indeed, thank you, Chris. I think, as you can, take a look at the China-Asia market turnover in terms of volume. If the retail, getting hot and participate, like in the past 25 days, the volume of the China-Asia can pass, 1 trillion renminbi every day, day after day. So I think the retail impact on the overall market has getting higher and higher. And George, what is your observation and view on this, question?
Yeah, no, I think that the retail market, the retail participation is becoming certainly much more sophisticated. So in other words, they're not just looking for, simple, straightforward exposures anymore. They are looking, as I mentioned in the last topic, for thematic, more thematic exposures. And I think that, the clear area where there's much more interest is around ESG, right? So, that's a trend that's, that's been a few years in now, and I hate to bang the drum on this, but now that focus is going a little bit more towards the climate-related focus. So, one of the big areas that we're seeing, much more interest is, on the low carbon targets, climate change, Paris aligned, retail, especially, starting in Europe, spreading a bit to the Americas, but now definitely becoming a bigger trend in overall APAC, certainly in DM Asia, so Japan, Australia, Hong Kong itself, that is becoming a much larger driver of the retail market and where that interest is going. Institutional money, I think, there's such a huge drive for return. Obviously, equity markets are very strong right now. And therefore, there's always the risk of missing that. In fixed income, where they're, obviously the chase for yield is always prominent. I think that people are recognizing that ESG investing does not necessarily mean return give-ups or yield give-ups. And therefore, they're being very careful in terms of looking at what the products are. But I think, as Mezhgan, referred to earlier, the open interest that's in these, in products that have ESG focuses, is growing, very steadily. And each time we go through a quarterly roll, and where, I guess next week will be the next time we see that with the SEP rolls, people are going from market cap or issuance weighted exposures into ESG and climate related exposures. So I think the retail participation in that, will definitely be a major driver. And the view of MSCI is that, ESG investing is going to be, in the next few years, mainstream investing, because of the fact that, it certainly has proven itself, from a performance standpoint as being, a winning bet. But of course, also, when people step back and look at the larger, impacts of climate change, which are, in front of us all of the time now, that trend is just going to be a consistent driver for the international investing community.
Thank you so much, George. Yeah, I think that makes sense. We cannot not discussing ESG going to, any one of the panel these days. Before I go to, Mesh, I think we have, 4 or 5 minutes, for one Q&A in case any audience you're interested to ask any one question. For example, Nicholas, he raised up his hand. Please do, feel free to type on it. And Mesh, what is your observation and view, on the retail participation, on the option and derivative space?
Yeah. So look, it's no kind of groundbreaking news that participation has risen enormously in the last 2 to 3 years. And this is due to a few factors, right? I mean, availability and ease of applications like Robinhood, Futu, Tiger, etc., makes it extremely easy to gain access to previously restricted and hard to reach markets. You have access to derivatives catered to the retail now, and all derivatives exchanges are creating new products in abundance in order to reach this market segment. The resulting COVID lockdown and stimulus checks received by many people encouraged them to enter the markets because they had some spare cash. And it's also equally resulted in extreme and unusual market behavior and volatility. I mean, one of the examples would be GameStop and AMC, right, where there was a coordinated buying of deep out of the money call option, which forced market makers to buy the stock and push the prices higher. So there's also a danger to some of this participation too. You have increased advertising from retail brokers on social media platforms, webinars, options masterclasses, etc., where you then see in December a massive surge in options trading across all equity option exchanges. A lot of these investors are the younger generation who do view the potential of wealth accumulation as a problem. And you have interest rates that are almost zero or close to zero. They can't leave money in the bank. Property ladder is currently unattractive for them. So they're naturally turning to the stock market, and crypto being another massive asset class now as well, in order to gain some exposure. So On our side, we observed actually a surge in our agency accounts. This is the end client flow coming into the exchange, where options participation, for example, increased over the last 2 years from 30% to 50% in 2021. And then liquidity and the micro product, within 97 days of launching the micros, 600,000 lots were traded already. With crypto as well, we're looking at a Bitcoin ETN, but this is a market that's going to kind of stay. And then the final point I would make, though, is there is an absolute moral duty on all exchanges, institutions, etc., to protect the financial system, but also protect the retail traders. Retail investors do employ rising leverage, margin debts, etc. There's evidence of retail investors currently taking risky one-way bets. And obviously a sharp rise in the price of any security raises the prospect that it will also decline just as fast, so potentially adding to the risk of those trading and holding as collateral the securities. So here it's extremely important as well, and something that we do very well is working with our key brokers in the region and partners on end client education and data-driven analysis to just make sure that the retail investors are participating in an educated manner.
Very good point, Mesh. I think, protecting the retail investor, no matter from my perspective, for the exchange or, any investment manager and service provider is very important. It's also, part of the, ESG, the governance, so that we have a fair, ground for everyone. I do not see any particular, questions, from the audience at this point. But before I hand over, back to Joy, I think I can do a quick, summarize of what we have discussed today. This is a very, interactive, panel. We talk about from a top down to the tools, specific. I think, Chris was, kind enough to share, his title about head of velocity and victory. But at the same time, I think we talk about the abundant IPO market in the Hong Kong, in the tech space, and talk about the ESG. And in terms of themes, I think, Nick and George also share about the bond replacement strategy, and Mesh talk about the growth, the tech, demand, from a top-down perspective. And then we also talk about a lot of, tools available from different service provider and exchange in accessing, for example, the China market, Taiwan, Korea, and emerging market, And then the third part, we talk about, how to embrace or how to protect a portfolio, given the market volatility. Again, we talk about options and derivatives, and there are more new tools, available from the exchanges for fund manager and investor to construct a proper portfolio. And then the last part, I think we talk about the retail participation. And again, I think the retail influence or impact to the market is getting higher and higher. But again, I think there are more tools and, available for the retail, At the same time, I think I appreciate Mesh, mentioning about the proper governance, how to, protect the retail, in that space. With that, I'm going to conclude, the panel, and I'm going to hand over to Joy. And thank you so much, everyone, for joining. In particular, George is waking up at like 3 a.m. to join the panel.
Happy to be here, William.
So Joy, over to you. Thank you.
Thank you. Yeah, thank you very much, William, for moderating this panel. It's very insightful and interactive with your rotating orders. I think that works, and also with your new mic. I'd like to thank Mezhgan, Chris, George, and Nicholas for sharing your views on the latest trends of equity and equity derivatives globally for Asia Pacific investor, including retail investors. So I hope the audience have enjoyed this session and found it informative. Next, in a few minutes time at 5:05, we will have a fireside chat on fintech innovation in the derivative market with CGS-CIMB and Broadridge, joined by Louis Richardson, the Director of Asia Pacific of Broadridge, and TK Yap, Managing Director of Group Chief Transformation Officer of CGS-CIMB Securities Singapore. Thereafter, we will also reconvene at 5:25 for the last panel discussion today on digital assets, blockchain, and marketplace, what's next in play. So stay online, and we look forward to seeing you soon. So thank you again for the panel. I hope you enjoy the interaction as well. Thank you so much.